Good morning, friends, on our Friday. Some week I will be able to tell you that it wasn't a big week this week, but it's not this week. It was a big week this week. And most of what I'm going to be talking about today is actually the reconciliation bill, which is now in the Senate, because we have had some language drop that really make it clear what changes the Senate is thinking about when it comes to Medicaid and SNAP. And so we're going to spend most of our time really focused on the developments of that bill and where it's going forward. But first, I want to recognize that people have been busy and, just kind of point out that there are folks across the state who have been engaging. This is an independent reporter and talking about what Medicaid actually does for them in very, very stark terms. And I think this is really important to keep doing as much as possible, especially as we get closer to this bill becoming more cooked into soup than it is a theory, right? I think it's almost more important that we start saying things much more bluntly, using small words to as many people as possible, because there are lots of people even folks who know a lot about or feel like they know a lot about this bill and what it would do, that really don't have that connection of what does it actually mean in somebody's life if the things that we know of today as stable start to change. So this is a good example of somebody who's saying, this is what Medicaid has enabled me to do. And I do think that the first sentence is just really grabs you because, it's telling you this is really where, like, this enables me to live in a place that I want, as opposed to an institution after my unpaid caregiver died, which is a common concern that we hear about a lot. We did have a number of folks try and engage with federal lawmakers this week, and I want to point out this approach. Two folks reported into us they actually went to a paid luncheon for Representative Weed and took that opportunity to ask him questions. He was there and he was taking live questions from the audience. And I don't know if people are going to be able to hear how the questions were asked, but I do have a couple of links because they recorded how they asked their questions. And I think this is a really great strategy that you can do in lots of public arenas. Both of these individuals asked their question about Medicaid, but they kind of built it up. They didn't just ask a three-sentence question and wait for a reaction. There was no gotcha. There was a lot of the information that you may have been hearing about here or read in different articles, just kind of laying out, here are the things that I know about Medicaid, and then really framing their question about, hey, you say that these bills won't hurt a person like my son, but here's what I'm hearing. And if any of what I'm hearing from, say, the Wisconsin Department of Health Services is true, that means some of what you're saying isn't going to be true. And that means these things for my person I care about or my larger community, because I think they also were framing their questions to talk about the overall impact on businesses and hospitals and other places that rely on Medicaid as a source of payment for their time. So I think that's a great strategy in terms of, laying out and kind of neutralizing some of the things that we keep hearing come back from elected officials that we know are not true. But it's also a great approach because they had an entire room that was a captive audience who maybe wasn't aware of some of the factual items that they were saying. And taking up that time and that space and that with that lawmaker, regardless of what the reaction was from the representative, was important because everyone else in that room heard that framing and heard the doubt that they were saying, hey, look, these things are true over here, and you're saying those things, and they do not match. And that's a really important way to use those opportunities to educate a larger room who really has to listen there. um, it's also a strategy that you can use when you are participating in teletown halls. We're hearing back from many people who are trying to participate in Senator Johnson's weekly teletown halls. Apparently, he's been having weekly teletown halls on Mondays at 2 p.m. Central Time. And you have to sign up to get notice. And notice is you're going to get a call from an unknown number that you should pick up and think and just pick up that phone number. That's the notice is you get a call automatically from an unknown number about 5 minutes before 2 p.m. on Monday. So a lot of people like myself don't pick up unknown numbers. If you don't pick it up, then you have to keep signing up for the teletown halls because anybody who misses a town hall, they get off the list. But anyway, we know that these are opportunities that exist. And so if you have that time reserved, think about not only the way that these grassroots have asked their questions, kind of how do I lead in with the facts? How do I lead in with what I know the state is telling me the impacts of the bill are and ask something that way? We're going to be going through a lot of information today and be thinking about what are the questions that I can ask in a way that really puts the lawmaker in a position of saying, of having to answer for the potential impacts of this bill. And I'll give you an example. We've talked a lot about prove your working requirements across these webinars. We will continue to do that because there have been some changes that make those worse in the Senate version of the bill. And so one kind of way to think about asking a question might be, so if somebody has worked 79 hours in 1 month, does that mean they should lose their health care? Because under the bill, if you don't have 80 hours, then you can be at risk for losing Medicaid. So if somebody has multiple shifts and their hours change and it's not something they can control, should that person lose their health care? That is kind of a way to think about framing a question that gets at, here's the policy. Is this what you really mean? Because if it is, then here's a situation that people have no control over, which is going to result in this negative outcome. And are you okay with the outcome? All right, the reconciliation bill. So continually, there are more and more polls that keep coming out. This is just the latest one. This one was published. This is the Washington Post Ipsos poll, but there are others done by Kaiser Health News and the YouGov and the Quinnipiac poll. Pick your poll. Most of them are consistently showing that there are a lot of people who do not know the nuts and bolts of this legislation. And I want everybody on this call to understand this. You are an expert on Medicaid. When you look at this polling data and you see that 34% of the people do not know what is in this bill at all, you are not amongst those 34%. Many of the people who will be voting on whether or not to do the things that are proposed in this bill are not experts on Medicaid. You are. The people who are attending these webinars know more about these Medicaid programs than some of the people who are voting about what policy that will have a major impact on them. So I don't want you to ever doubt your expertise, because the amount of knowledge that the average person has about what these programs do and what they mean and what would it mean if they looked different is very, very small. Welcome to the nerdery of Medicaid people. You're among our Medicaid nerdery. And when you are now recognizing that you're one of the experts here, understand that 2/3 of the public are saying they have heard very little or nothing about what is in this bill. You have heard a lot about what's in this bill because you're paying attention. And some of what is in here is actually going to impact things that you have a lot of personal experience with. The good news is, if you've heard something about the bill, you probably are not supportive of it. So that is an opportunity that if people hear more and more about what is actually in the bill, they tend not to like what is in the bill. And for those folks who have heard a lot about what's in the bill, the most informed people, of which you are part of that elite group, mostly, nearly half strongly oppose it. So when you're thinking about asking questions, or should I have a conversation, or should I bring this up in this group? Yes, you should, because the odds are that you will be one of the first people, or maybe the first information that someone in that room is hearing about this bill. And we are getting to the point where we are again in a moment where we're probably going to see events start to accelerate. So this week, we saw the first language released by the Senate Finance Committee that kind of outlines, here's what we're thinking about in terms of changes to tax code and changes to Medicaid, because the Finance Committee oversees both those things. And we'll get into what those changes are for the rest of the presentation. But I think the important thing in this moment to know is we are in a place where the next 5 or 6 days may determine whether we have a delay or whether we are potentially seeing a bill, the version of which we have not yet fully seen, going potentially for a floor vote next week by the full Senate. So there's lots of back and forth about, the text that we've seen being placeholder text or in negotiation. The reality is, very much like the House, if you remember a month ago, we saw the same sort of pattern where we had some initial language and then that language kept changing at kind of every stage of the process. It really looks like the Senate may be poised to do something very similar. So there is kind of language the committees have released. The committees are not going to be doing hearings on the language they've released. They are going behind the scenes, kind of ruling out pieces of language based on the Senate parliamentarians' ruling and whether it can be included under Senate rules in the reconciliation. They're doing that work. But what we are hearing is what we are seeing right now may not be what ends up in the legislative text. And that means it could be worse or it could be better than what we see as a current draft. But what it will mean is it will be unknown until it's released. And Senator Thune, who's the leader in the Senate, has been very clear and very consistent, not only this week, but in multiple weeks, that he really feels like July 4th is the deadline he wants to have for the Senate, take the full Senate taking action and passing this bill out of the Senate. So he's being very consistent about that. And we are hearing that potentially, if you want to meet that timeline, then next week becomes a week where you would want to be pushing for a vote by the full Senate on the floor. We are also hearing that there could be legislative text of the full bill. All of the, all of the things have to be packaged into one big document. And that maybe we might see that on Monday. That would be important in the sense that you would assume that that text that is released before you try and have a Senate vote would represent negotiations and tweaks from what has already been released from the committees. And that legislative text, of course, would also be subject to being amended by the Senate on the floor. So very similar to the House, where we had language released that was then changed in the next part of the process and over, a period of hours or a period of days. It really does seem like we are in a similar pattern with the Senate, and that is strategic for a couple of reasons. So if the Senate is able to kind of get its legislative text packaged into a document, and Senator Thune is successful in getting something to the floor and really kind of twisting the thumb screws on his members, we could see a vote as early as next week. Probably Wednesday or Thursday is generally when you would expect to see that. And then we would be in a different stage of the process. So let's talk about what we know right now as of Friday. Monday evening, the Senate Finance Committee released 550 pages of draft legislative text. And it includes some tweaks to the House. Remember, they're starting with the House bill. So this 550-page draft is basically a list of changes they want to make to the House bill. And it does include changes to Medicaid, impacts to Medicare, and ACA marketplace changes. It is hard to know if these changes are things that are already agreed on, or at least in some fashion, or if they are placeholder texts that could be changed as negotiations continue. My sense is some of these changes reflect things the Senate has agreement on, and some of these changes, there may be a little bit of flexibility. When I say it's a strategy to kind of move fast and not necessarily know what language you're actually talking about, it is a strategy to shorten the amount of time. Not having a final text out there means that people don't know whether or not it is final, and waiting to release what you think is the final text until maybe a couple days before you're going to vote on it gives very little time between when what you're proposing becomes, at least I won't say clear, becomes public, and then when it's voted on by the full Senate. We saw a similar strategy in the House where it was really confusing to know exactly what version was being proposed because it kept changing. And then you even saw a number of House members say, well, I didn't know that X or Y or Z was in the bill, well after the fact. This is a strategy where you kind of create a crisis that needs, where action has to happen quickly. And that means that when people take that action, they don't necessarily know all of the things that are in the bill or the impact, or it gives them cover to say that they don't know that when somebody finds out a couple weeks later that some of the language in the bill does something that isn't real positive. So this week,
the Senate parliamentarian has continued to read through every line of that bill and see if the language in the bill conforms to the Senate rules. We've talked about before. There is a bird called a Byrd rule, named after a former senator whose last name was Byrd, that kind of sets out what can and can't be in a reconciliation bill. And there are some provisions that keep being talked about as maybe not meeting that criteria that would have to be removed. The other thing to know is that Democrats also can challenge provisions in the bill and say, hey, we don't think this matches the Byrd rules, so it shouldn't be in the bill. You do need to have some sort of final text you're working with in order to have that happen. And we're hearing that maybe over the weekend the assessment of Byrd rules compliance will be happening. So the Senate parliamentarian, all of the things that I am seeing about most likely to be removed from the bill or not pass the parliamentarian's muster, none of them have anything to do with Medicaid or SNAP cuts. So I think there will be things that end up being removed from the bill, but I don't think that the ideas that we're going to be talking about today are going to be among those ideas. So the things that are of most concern to people with disabilities and older adults are likely to be ruled as being appropriate to include a reconciliation bill. And I don't think we should assume that even if a Democrat does challenge it, that there would necessarily be any of the provisions that we're going to talk about today that would just be removed and say, nope, you can't put that in a reconciliation bill. There's kind of a lot of chatter about people being, the senators being themselves being unhappy, which is good. Like, I will also say that this was true during the House version of the bill as well, that there were certainly members who were from a more moderate position or a more fiscal conservative position or had specific issues that they really cared about, that were all jockeying and trying to influence the final language of the bill. So that is also true on the Senate side. In the House side, I think that fighting amongst members of the same party and having very different perspectives probably did prevent some of the most significant cuts to Medicaid that were on the original menu from being included. So I don't want us to think that this isn't important, right? That the House version of the bill did not do like per capita caps or some of the other big ideas that really were on the table in February. What's doing is impactful enough, but it could have been a lot worse. So we are now in the position again where we have diverse groups of senators who care deeply about very different things and who are all finding some part of this bill that makes them unhappy. There are senators who don't like some revenue reductions, tax cuts in the bill and want to see them removed or want to see less. There are some senators who say, I think we shouldn't remove these energy credits. There are some senators who are saying this doesn't cut nearly enough. We should be cutting a lot more. That's important in the sense that it's a very diverse group of senators that have many concerns. And some of them might be able to get a few tweaks to the bill. We know that the committees aren't going to have their fiscal estimates from the Congressional Budget Office for the changes that have been made, probably before they vote on a bill potentially. We're in a place where the Senate parliamentarian hasn't made final rulings yet. And so we're in this moment where there's still a lot of influence that can happen, and constituents are part of that influence. The more disagreement there is, the harder it is to find the thing, the magic words that get us to 51 votes in the Senate. And that's really the problem that's trying to be solved here. How do we tweak the words and rearrange them to get the magic words that will lead to 51 hands saying yes? Um, so as constituents, we can certainly offer ideas about what things should be removed or what things senators should do to change the bill to make it less impactful to people like us. And the more the Senate disagrees and doesn't get, a set of magic words that will be a green light, the more delay it buys us. And that delay is especially important now because we know that there are lots of people who don't know what's in this bill or what it means. And any more time that we have to educate more and more people about what's in the bill means that we could move more and more people from having no opinion to being non-supporters. And that starts to really matter. It also really matters because some of these proposals that the Senate has tweaked would have probably greater impact fiscally to states and to Medicaid programs. And the Congressional Budget Office often needs time to figure out, like, how does this change, how much federal spending is reduced. So the more time we have, the more likely it is that we have some of those estimates before there's a vote on a bill. And if that is true, that makes it a lot harder for senators to ignore those estimates or to say that they don't matter. So it's really important to kind of get a delay now, if we can, in order to get more information that helps us make the case that this bill is going to be more impactful to people who are in Medicaid or the ACA marketplace exchanges and who are on SNAP. So next week could be the magic week, or we could, successfully get a delay, and then it may not be the magic week. If we are going to a floor vote, the bill has to have a debate. The debate is 20 hours, 10 hours for the Democrats and 10 hours for the Republicans, and the bill can be amended on the floor. So we should be prepared that if we do see some version of the text on Monday, maybe it gets a little bit tweaked before it goes to the floor, or it could be tweaked on the floor. So there's still lots of opportunity for changes in the Senate, even if we're going to a vote next week. And we will likely not know that until maybe a couple days before. If the Senate does pass the bill next week, it's theoretically possible it could go and be scheduled for a House vote on the 30th. More likely there will be time, which again is important because then that means we have time to understand what the impact of the Senate changes are on that bill and make sure everybody else knows them too. It's also possible that there are enough changes the Senate has made from the House version that they do a conference committee. So I won't talk about that a lot now because it's a different process. Where kind of some members of the House and Senate go behind closed doors to negotiate the final language. But be aware that there's a possibility, and that even when the Senate has completed the step of voting on the bill, it is not over, that there are multiple steps to go before that. And at every point, it is becoming more and more important that more and more people understand what is in this bill and what the impact is. All right, so big picture. House bill bad,
Senate bill worse. The Medicaid cuts that we are most concerned about in this state are actually made deeper by the Senate version of the bill. It would make more people subject to extra paperwork and red tape than the House bill does, which again increases the risk of mistakes, either by the state or by the person, that could result in the loss of Medicaid coverage. Because again, every provision that is making it harder for people to get in or stay in Medicaid, or the marketplaces for that matter, is really saving money when people lose coverage. The Senate version of the bill doesn't really resolve any of the concerns that either senators who were worried about Medicaid were saying publicly, and it certainly doesn't resolve any of the concerns that advocates were having. And actually, it makes some concerns that big special interest groups and states have worse too. The same programs, Medicaid and SNAP, and certain other healthcare changes are the targets here. These are the main places that they are looking for federal savings to offset the reductions in revenue by changing the tax code. So it's the same group of programs that mainly people with low income or who are in poverty use, that are being used to finance the less revenue coming into the government to spend. And I think that one thing that is important for us to keep emphasizing is, even if you're not in Medicaid or SNAP, these cuts are going to be impactful to the entire healthcare system and economy. And, when people lose coverage, they don't have insurance. That means that that doesn't mean their care needs go away, and it doesn't mean the cost for that care goes away either. It just means you don't have Medicaid, or potentially the marketplace coverage, or maybe Medicare that's paying for it, which means somebody still has to pay for it. And for most places, that's either the private insurance rates go up, and or uncompensated care increases. And sometimes states are in the position where they're trying to bail out hospitals to compensate them for that uncompensated care. So all of these cuts to Medicaid and the healthcare system in general that this bill would do really aren't there. They may be reducing what the federal budget, what the federal spending is, but it isn't reducing the cost of care. It's simply shoving those costs onto other payers, who are everybody who's privately insured, and also states and the healthcare systems that may or may not be able to absorb them. All right, high level. What are the tweaks of the Senate bill? Still a debate on what tax revenues to reduce, by how much. Lots of different taxes. The state and local taxes. There are some people who want to keep clean energy credits, some people who want to get rid of them. There's a lot, throw a dart at the dartboard, and you'll find somebody who has an opinion about a tax cut that they feel should be better or shouldn't be in the bill at all. We're going to talk about the SNAP changes. They are making it harder for more people to successfully stay in SNAP and increasing the cost shift to states. So this is again probably deeper cuts than the House bill. That is also true in Medicaid. And also there's a clear kind of pattern of making it structuring the policies so there is an incentive for non-expansion states not to expand coverage of Medicaid, and for states who have expanded Medicaid who kind of decide not to do that anymore, to be compensated in a way that they probably won't decide to expand Medicaid again.
We should expect that we're going to see some evolution of what we're going to talk about today. Again, it could go either way. The changes could be made better for some people or worse for others. What we can say is the things that we are most concerned about that impact people with disabilities and older adults the most have not been made better. They have been made worse by what the Senate has done so far. And as an illustration, this week, the other thing that our friends at the Congressional Budget Office released is a new analysis of the House passed bill. Remember, the House passed their bill almost a month ago. So this is 4 weeks after May 23rd, which is when the House passed their bill. And we are now getting the most comprehensive analysis from the Congressional Budget Office of what would the impact of what they passed be on the deficit. So when I'm saying like buying time to make sure that we have an understanding of the analysis, that's the kind of lag time that sometimes happens when you're trying to figure out what does a complex piece of legislation actually do. So Tuesday, the Congressional Budget Office said, hey, the House bill is going to increase the deficit by $2.8 trillion. Their initial estimate was 2.4 trillion. So this was an analysis that kind of factored in other economic effects. It's highly unusual to see an estimate go on deficit spending go up, especially by that much. Usually they factor in other economic effects, and maybe there's a slight uptick or downtick of how much they're projecting a bill will add to the deficit. In this case, it's a very strong and significant uptick to the deficit. That's important because, again, there are fiscal conservatives who do not think we should be reducing the amount of revenue coming into the government to spend without cutting what we're spending. They don't think that deficit spending is a good idea. They're not wrong. We can't, there are certain times when you have to take out a loan or you don't have the money right now, but you will. Like everybody uses a credit card or loans or some amount of spending, but you have to pay that money back. And you have, the federal government now has a lot of money that they've taken out on the promise of paying it back later, and they have to pay a lot of interest on that money right now. So not only would the bill add $2.8 trillion to the deficit, but when you think about all of the other money that we've already, spent already and then not have enough revenue to fully cover the bill, this bill would actually add about 3.4 trillion to the deficit if you think about the interest that we would have to pay on that money to allow ourselves to kind of go into the red. So that's a big deal in the sense that if you're a fiscal conservative who has said we're not cutting enough, we don't want to add to the deficit. If we want to reduce the amount of money coming into the government, we also need to reduce the amount of spending that we're doing. This would mean to you that you have to make a lot of significantly more cuts. And there are certainly members who feel that way and are making that case. So Medicaid. We've talked a lot about prove you're working and exempt requirements. I have a little here's what the House bill kind of did, and here's what the Senate did. This is a really big change. So it was a big change in the House to set the working age to 18 to 64. Again, that means a lot more people potentially are subject to those requirements, right? And you either have to prove that you are working 80 hours of community engagement or prove exempt status. This Senate change dramatically changes, who is in the category of having to prove that they are working, those 80 hours of community engagement. Because now it is any, if you are an adult with, and you have, whether or not you have children, if your children are over age 14, then you are now subject to the work requirements. Before, there was some argument that could say this was only for childless adults, for people who didn't have children. Now it's very clear that parents who have kids who are older than 14 are subject to the work requirements. So a lot more people will have to go through that process to prove that they are meeting those 80 hours, or prove that they are exempt for some other reason. And of course, the bill doesn't, tell us how do you document and qualify for an exemption, or how do you prove that you're working enough. So again, big change in terms of this now applies to many more people. Another change the Senate made was to one of the exemptions to the working requirements, specifically for caregivers. And of course, we're really concerned about unpaid caregivers. We just had an event yesterday in Dodgeville, and I saw an article come out today about it, that really talks about how unpaid caregivers are really relied on by the Medicaid system, not only to provide care, but also to help people navigate through the paperwork. So the Senate has changed, again, the magic number of 14. They have added family caregivers to the list of exempt people, and provided a definition of who those folks are based on federal legislation. Okay, that's fine. That's clarifying, here's who we are talking about when we talk about family caregivers. However, the other change in here actually really narrows who can qualify for that caregiving exemption. Because it says if you have, if you you are only a caregiver if you are taking care of people up to age 14. Well, that doesn't help you if you are caring for an adult, or somebody over 14 with a disability, or for older adults. So again, that means that there are fewer people who would be able to qualify for a caregiver exemption. And that would mean if you can't qualify for the caregiver exemption, you would either have to qualify for another exemption, a different exemption, or you would be subject to the prove your working requirements and have to prove that. It does, and of course, the issues that we've talked about before, well, what qualifies as caregiving, and how much do you need to do, and how do you document your caregiving to prove that exempt status? This bill doesn't help any of those things. So it isn't necessarily easy to qualify for an exemption anyway, but it's very clear that this exemption applies to far fewer people, at least under the Senate bill. The other change with regard to prove your working exempt requirements, there is a little more flexibility for states to delay implementation, not delay as in not do it, but to have a longer time to implement. This was, again, one of the things that specifically Senator Murkowski was very concerned about is, hey, the House sets a really, tight time frame. Like in a year, you have to figure out how to do all this stuff for states. Well, the Senate softens that just a little bit. And I'm not sure it's that helpful, to be honest. But it does say, well, states can apply for, some extra time, essentially, and have until December 2028 to figure out how to do this. But it also has a clause there that requires the states to do a lot of reporting on what they're doing to implement the requirements, if they get a waiver, and that waiver can be revoked at any time. So I would see this as not a delay, but a more time to implement the idea. Some states may choose not to apply for a waiver, in which case the January 1st, 2027 implementation date becomes the date at which this starts. Some states may choose to apply for a waiver and get their work done earlier than December of 2028, and they may implement their requirements earlier than December 2028. Some states may apply for a waiver, and the department may the Department of Health and Human Services may decide that they're not doing enough to actually implement or to qualify for the waiver, and they may have their waiver revoked, at which point they become responsible for implementing either by January 2027 or whenever the waiver is revoked. So I would look at this as you have a little more time and flexibility, but it does not in any way change the problems that states need to solve, the amount of money it will take for states to figure out how to do this, or ultimately what that people who right now are in Medicaid don't have to prove that they are working a certain level, and they don't have to prove they're exempt. It does not change the fact that those will become requirements at Medicaid in a relatively short period of time. December 2028 sounds like a long time, but we're in the middle of 2025. And when you think about how long it takes to make decisions about what is, how much caregiving counts, what is caregiving, like there's a lot of things that states have to figure out fairly quickly. The other change that it makes that may be of interest to some of our MCO friends, there's a specific prohibition that says, hey, MCOs or other contractors that the state may hire to help operate its Medicaid programs, those folks can't say that the people they can't be the people who decide whether somebody is compliant. In other words, the individual, they can't be the ones that say, yep, they're exempt, or yep, they've proven that they're working enough. So it really is saying to the state, no, this is a function that we are expecting you to do, and that is a whole that's a thought process the state now they can't delegate this out to somebody else. They have to figure out exactly how they are going to collect and document and verify that people either are exempt or are working enough. And if they're not working enough, the steps that happen next. There is a change to eligibility determination. And the Senate adds an exemption. So in Medicaid, in Wisconsin, the twice-a-year eligibility checks don't apply to everyone. They would apply to childless adults in Badger Care, which is still a lot of people, and a lot of people with disabilities who are in Badger Care who may not have children and would be not only subject to prove you're working or exempt requirements, but also extra eligibility checks. So the Senate doesn't change, the requirement for that group of people, except to say that if you are already receiving SSI benefits, you are exempt from twice a year. Well, you can be checked once a year. There are an awful lot of people with disabilities in Badger Care who are not on SSI benefits for a number of reasons. While this is a gesture to say, okay, if you're on if you have a disability that's qualified for SSI, we will check you once a year instead of twice. Ultimately, there are many, in Badger Care, that is a place where many people with disabilities are who are specifically not on SSI. So, in terms of how many people with disabilities does that shave off and prevent from having to do twice a year checks instead of once? Some, but it's certainly not everybody who would be subject to that requirement. Retroactive coverage. Again, this is an example of where they're trying to do some sort of incentive structure that if you're a non-expansion state, you can have your retroactive coverage 2 months instead of 1 month. Right now, it's 3 months. At our event yesterday about caregivers, Janet gave a rather impassioned and very quality explanation of why retroactive coverage is so important. And I'm going to try and parrot it for us here because we haven't talked a lot about it. But a lot of times people don't know they're going to need Medicaid when something happens. So perhaps you're involved in an accident or there's been a fall or some crisis point where you end up in a hospital. And hospital bills are expensive. Maybe you're told, no, you got to go to a rehab facility. No, your life has changed and you are accruing bills. Retroactive coverage becomes really important because most people who are laying in a hospital bed accruing bills that they don't fully understand how big they're going to be are probably not on their smartphones applying for Medicaid in real time. And oftentimes, again, it is unpaid caregivers or other people in that person's life who are having to gather a lot of diverse documentation as part of the Medicaid eligibility process. Does this person have a life insurance policy? Or, all sorts of things that may factor into whether or not this person's income and asset is sufficient to qualify for Medicaid. And so it becomes really important because all of those things can take time and they can take time to unravel because oftentimes the people who are helping may not be fully aware of all of the parts of somebody's life, or they may have to go to a bank or, other places to kind of verify and get the documentation needed to complete the Medicaid application process. And all of that time, bills are accruing. So being able to, as soon as the Medicaid eligibility is approved, look back and cover 3 months of bills is really, really important. Shortening the amount of time that you are covered means that there's going to be potentially for some people, especially with high bills, there's going to be some amount of money that isn't covered by Medicaid and that may not be covered by that person's assets, or you may have to sell a home or other things. And it's a big deal to be able to look back 3 months, and you can see that shortening to 2, there could be a lot of things that are high costs that wouldn't be covered, that would be outside of the window, that would be paid for. And that can be pretty impactful to families, especially as they're trying to manage across a crisis. So this is a slightly, I don't want to say improvement because, for certain people in Medicaid, the Senate doesn't change anything at all. If you're part of the Medicaid expansion population, no 1 month look back is still it. If you are in a non-Medicaid expansion population, which does cover many people in Wisconsin, then you get 2 months, but that's 2 is still less than 3. So it's better than 1, but it's not as good as 3. And that's also true for other populations that get 2 months instead of 3.
And I think this is a change that we haven't covered a lot, but it is extremely impactful to a lot of people and probably going to hit them at a time when there's just lots of other stuff happening in their life because, you know, they are in a situation where they are in the hospital or are in a rehab or a nursing facility, and trying to figure stuff out. The provider tax we've talked about a little bit. This is a bit of a surprise for the hospital special interests. The House bill they were not happy with, but the Senate makes an even deeper change to the provider taxes. And again, it allows non-expansion states like Wisconsin to remain at 6%. Again, an incentive for non-expansion states essentially to not expand. Although it doesn't change the House provision that we would be frozen at our current rates. So Wisconsin, we don't tax up to 6% right now. So for us, like we'd have to raise our provider taxes like instantly in order not to have them frozen. So ultimately, this change may not impact Wisconsin as much as many other states, but it does impact many other states who use this revenue source to draw down more federal Medicaid dollars pretty routinely and as a way that they support the amount of state match that they are required to pay in order to get Medicaid dollars. So again, more of an incentive for expansion states to consider covering fewer people. We are not an expansion state, but it does mean it is a change that is a lot different than the House bill and more and probably stronger. And there are tons of things that the Senate didn't change about the House bill. Here are 4 things that we've covered before that remain the same. So, you know, that idea of having to prove you are either exempt or conforming to the 80 hours of prove your working requirements for the Medicaid, that's still there. The idea that you can lose coverage if you can't prove you're working enough or exempt, and that states have to have a process for how you lose your coverage, that's still there. The idea that if you lose your Medicaid coverage, you are not going to be eligible for the subsidies that reduce your cost of marketplace plans, that's still there. And lots of these changes that are in both the House and the Senate bill really do result in more administrative work or costs for states. None of the things that the Senate is tweaking are making it easier for people to get in or stay in programs. So all of the money that they're claiming they're saving, all the federal dollars that they're claiming they're saving, they're still primarily coming from Medicaid and SNAP cuts. That's not changed. They're still coming from changes that increase paperwork or red tape and that they know will result in people losing health care or food assistance. That's how the federal government is saving money because fewer people are in the programs. And if you're not in the program, then the program doesn't spend its money on you. They're not changing things that are going to make it easier or less burdensome for states to comply with these requirements. On SNAP, again, that's known as food share in Wisconsin. For the first time, states would be required to provide some amount of state funding in order to draw down federal money for food assistance. Currently, SNAP is 100% federally funded. And you might remember that our Department of Health Services actually did a calculation on what would the House bill changes mean for our state in terms of increased costs. And the House bill said, hey,
we're going to require every state to pay a 5% match and then ratchet up how much match states have to pay based on their error rates. And our state said that's a big chunk of change because we get $1.3 billion of SNAP aid into Wisconsin per year, and 5% of that is, multi-millions of dollars that we would have to find somewhere that we're not paying now, in addition to other changes the House wanted to make in SNAP that would result in more costs for the state. So the Senate did a version of this where states with less than a 6% error rate would not have to pay any match. Okay, that's the status quo of what the law is now. And currently, Wisconsin has an error rate of less than 6%. And then they have kind of this range of as your error rate goes up, then you do have to provide match. Well, here's the thing about that scale. Error rates change from year to year and sometimes by a lot. And errors include everything from over and underpayments. Most are mistakes. Some of those mistakes are made by the state or by families. So the fact that Wisconsin has, in this moment of time, an error rate that is below 6% does not mean that that will always be true. And when food advocates looked at this provision, they noticed that the timing on when error rates are calculated is out of sync with most state budget processes. So this is introducing a lot of unpredictability and uncertainty for states because they won't know what their error rates are until in late September. So the federal fiscal year runs from September 30th to October 1st. And that's after many states have already passed their either annual or biennial state budgets. In Wisconsin, we generally have a 2-year budget, first of all. And again, this is an annual error rate. So that means if we pass a 2-year budget, assuming that we have less than 6% error rate, maybe we're right in the first year. Maybe that error rate goes up in the second year. You can end up with budgetary surprises. And our budget has to be passed by June 30th under state law, which is some months before the end of September. So the risk of states having unexpected budgetary shortfalls because the error rates aren't calculated in sync with state budget cycles increases. And states really don't have an ability to challenge those error rates either or do anything about them. And again, the errors aren't fraud, they're mistakes. And they also cover underpayments. That becomes part of the error rate. So you could have a high error rate where everybody got too little money, and the state would end up having to have a potentially pretty up to 15% of the total cost of food share that it would have to pay, kind of out of the blue once the federal government told them to. Many food advocates feel like this kind of change is really a policy that incentivizes states to try and serve many fewer people and to get the amount of food share that is being used in the state to be much lower, to lower the risk of, how much they could end up having to pay due to unreinforced errors. In other words, if you think about, we get $1.3 billion of food aid into Wisconsin per year. Well, 5% of that's a lot, 10% is more, 15% is a lot. More than that, what happens if instead of $1.3 billion in aid, we got $500 million?
the percentage of that is lower. And that's what food advocates are kind of saying is it's like the incentive now is to provide fewer food benefits to fewer people and try and have as few errors as possible, and really scrutinize that money in order for the state to not be caught with a bill that they weren't expecting. The state administrative match, this is actually a big change that is not in favor of states. The House bill, right now, the federal government pays 75% of what it costs to operate the state SNAP program, and the states kick in 25%. The House bill would have said, yeah, we're going to only pay for half of what it costs to operate. That's a big cost jump for the state, and our state did an assessment of how much that would be, and I can't remember the figure, but it was again many, many millions of dollars more that the state isn't budgeting now that it would have to pay. The Senate change actually deepens that problem. It reduces the federal match down to 50% next year. 2026 is next year. And then reduces that federal match from 50 to 25% a year after that and forevermore. So that really kind of flips the relationship we have now, where it now, instead of the feds paying 75% and the states paying 25%, the states would end up having to pay 75% of what it costs to run the program, and the feds only pay 25%. That's a significant increase in, money that the state has to pay in order to keep running the program. And some provisions that we have highlighted that the House did were unchanged by the Senate that we think would be problematic for the state and lead to increased costs, including these two. The last one I'll cover in depth again. SNAP already has prove you're working and exempt requirements, but the House bill increased how many people those requirements would apply to. The Senate does even more. So we're still expanding who has to either prove they're working or exempt to people who are between 18 and 64. The Senate version is slightly more generous by saying, okay, we will exempt people who have children who are under age 10 instead of 7, like the House did. But the big change that is new, the Senate included, is that you have to not only limit caregiving exemptions, but you are adding time limits. So if you can't prove you are working at least 20 hours per week, then we're going to limit the amount of time you can get SNAP in a year. And that means that if you have a fluctuation in your hours, if you have any reason why your documentation is late, or somebody has made a mistake, either you or the state, that means they can basically take away your food assistance benefits for a good portion of the year because of those things. And that is a new thing in this program. A lot of the food advocates really do feel like that will dramatically reduce the amount of food aid that is going out, and not because people aren't qualified or because they in fact didn't work enough or whatever. It's simply you're checking a lot, and it's very likely that somebody has some fluctuation in hours or isn't going to meet something one week but may the next. It adds an unpredictability into whether or not that benefit will be limited from people because of this new administrative requirement. We've talked a little bit about how Medicare is impacted by this bill. Yes, it is true that the bill has enough increase in deficit spending that it would trigger sequestration. That's the automatic 4% cut that would impact Medicare. Obviously, the Congressional Budget Office's latest figures really confirm that, yes, this adds to deficit spending. But there's another piece that's always been part of this bill. We haven't covered it in depth, that is really about the repeal or failure to implement certain administrative rules that the Biden era administration has put in place. And those rules were really trying to make it easier for people to navigate and get into the system. They were trying to automate some processes. They were trying to make sure that states were, cutting red tape and using less paperwork. And one of them really impacts the Medicare savings program, which for people who don't know it's actually for people who are both eligible for Medicaid and Medicare, so-called dual eligibles. About 40% of people in Medicare are actually on both programs, Medicare and Medicaid. And for those people who are in Medicaid, you're in Medicaid because you're low income. Medicare does not pay for all bills. And so many people who are in Medicaid and Medicare are eligible for this particular program that helps them cover medical expenses that Medicare doesn't cover, including things like coinsurance costs and premiums. And those can be really expensive. It's not hard to run up a $20,000 medical bill these days. And if you are a poor person who is in Medicaid and not in a Medicare savings program, you could end up stuck with bills that Medicare doesn't cover, and that unless you're in this program, Medicaid wouldn't either. So some of the rule repeals that are embedded in this bill, are going to make it harder for people to get into these programs that are designed to help them. And it's also an illustration of this is an existing program that's too hard and has too much red tape, and that people can't figure out how to get into, even if they're eligible. So the rule was designed to try and address that problem. And the bill is saying we're not going to address that problem. And in fact, we think that, by not addressing the problem, by continuing to allow things to be really hard, people won't get in, and that will save us money. Okay. So when you think about the prove you're working or exempt requirements for SNAP and for Medicaid, that is the same idea. That is adding in paperwork and red tape with the idea that it will become hard enough that many people will not make it through or will lose their coverage. This is the same idea, except we had a rule that was going to try and make it easier, and now we're not going to do it. So it's going to remain hard. And we know that that will mean lots of people who could be helped by this program aren't going to be able to figure out how to get in. The budget bill repeals this rule, and there is an estimate that about 1.3 million people who qualify for the assistance will not get the benefits. This impacts mostly people with disabilities and older adults who are low income. So again, when your lawmaker says nobody in people with disabilities or older adults, vulnerable people we don't want to hurt, aren't going to be hurt by this bill, this is a very tangible way of saying, yeah, that's absolutely not the case. That there are plenty of people who are dual eligibles who are not going to get the assistance that they need, and that is really literally going to cost them in premiums, in coinsurance, and for a lot of folks, it may mean that they actively delay care or don't get care. because they know they can't cover the costs that Medicare isn't paying for, and they don't know about this program or can't figure out how to get in. Um, a little bit more, we keep getting more and more information about how prove you're working and exempt requirements are really going to impact different populations of people. So just a little kind of global, it's generally not the worker who decides whether or not they're working or how much. Employers are in the driver's seat. And sometimes when we hear about these requirements, like they kind of are talked about as like an incentive to get those people who aren't working into the job force. And they kind of gloss over that there's very few people who aren't working, and that those people who aren't working often have very big reasons why they're not working, including disability and caregiving and other things. But it also glosses over this basic concept of it's really employers who make hiring decisions. They make layoff decisions. They make scheduling decisions. Who gets hours and how many. And those employer decisions now become extraordinarily impactful to individuals who have to have the documentation to prove they are working enough to keep their health care. And I would also notice that employers are making decisions about what benefits they offer or don't offer to workers and their wages. So employers who don't offer benefits at all, right, healthcare benefits, who don't pay their workers a lot of wages, those are likely to be people who are low income enough to qualify for Medicaid, right? If you don't make enough to purchase a plan on the ACA marketplace, your next place is Medicaid. So if you're working for an employer who doesn't provide benefits, or you're not working enough hours, whether that's because you're part-time or because your employer isn't giving you those hours, or you're working several jobs and kind of counting up the hours between them, the employer is putting individuals in a position where they are more likely to be on Medicaid. And now an employer is also in the position that the other decisions that they make may actually jeopardize the healthcare coverage that they are not supplying that person. Because if they fire that person, or if they don't have enough hours, that can ultimately impact whether or not they meet the documentation requirements to prove they're working. And if they can't, then they're losing their health care. Just to give you an idea of how often this happens, 20% of the workers in the bottom, of low-wage workers will see some amount of joblessness in the next 3 months. That's pretty high. And it impacts a good portion of the nation's workforce pretty routinely. Every month, about 2 million workers are laid off in the US economy. Now, some of those workers may be higher income, maybe they had employer-sponsored benefits, maybe they can, pay a lot more for COBRA. Maybe some of those workers get a job in short succession, right? I don't know how many of you in the audience have, had a time period where something unexpected happened and you lost a job. Sometimes you get lucky and that doesn't last for long, but sometimes it lasts for longer than you can afford it to. So in this economy, we should acknowledge that there is already a lot of churn in jobs and many people who are going through this on a monthly basis. Now adding prove your working requirements means every one of those things that happens that causes people to lose a job or have to find a new one may ultimately also impact whether or not they get to keep their Medicaid coverage during that time. And there was just recently a blog post by our friends at Justice for Aging that really kind of illustrated like some of the scenarios that are specific to people with disabilities where these kinds of administrative requirements are going to be impactful to their ability to keep healthcare coverage. And part of what the article points out is that there are lots of disabled people who are part of the Medicaid population. Um, we have a lot of, we didn't expand Medicaid in the same under the Affordable Care Act, but we have a population of people in Badger Care as well who are kind of like that, except they aren't allowed to earn up to 138% of the poverty line in the state, only up to 100%. It's the same kind of group of people that in other states are allowed to earn a little more, essentially. And a lot of those people end up in Badger Care because they're not getting into Medicaid through disability related categories for different reasons. Sometimes the disability related categories aren't as clear cut, or there's a lot of process to kind of, again, prove your disability and document that, and it can take a lot of time. And if you need Medicaid now, you may be working on a disability pathway, but if you also might need your health care and go into a different program that you're allowed in without having a disability status. There are also lots of people who will find it difficult to seek exemptions. Again, the documentation that you might need for an exemption can be equally difficult. And so there are several examples that the blog post gave that I thought would be useful to share with all of you. And I kind of edited down some of the language just to make it plainer. But I think when you have lawmakers who are saying this isn't going to impact with people with disabilities, all of the examples that Justice in Aging is using are fairly common. Like, these are not situations that are unusual. And you look at this example, here's somebody who's kind of middle-aged. He has multiple part-time jobs. He has an underlying condition. And that underlying condition has caused him to have to reduce his work hours. He's not earning enough for the marketplace subsidies. So here's a person who is working as much as he can. His condition is impacting his ability to work, but because he isn't working enough, he is not accessing health care because he doesn't know if he can pay for it. This is also a person who's applied for SSI, but you have to be able to go to the doctor to get the documentation that you need to be able to prove that, which he's not going to the doctor because he can't afford to go because of his lack of insurance, and he's working less, which means he can afford less because of his chronic condition. So you can kind of see that there's this cycle of, yes, there's a process for people, but the process is not only hard in and of itself, it is harder when somebody has to do things that they can't afford to do or can't afford to access in order to document the things to get them through the process. So, and I would say this is not an uncommon example of what can happen to somebody. The next example this blog post went through, again, I kind of think I know some people who fit this. Here's a person who really had a career, who had an accident, and that accident impacted her ability to do the job that she was doing. Lots of people I know apply for SSDI and then have their claim denied and have to appeal that claim. In fact, there's been articles over several years that have really said it's really hard to get into SSDI, and that lots of people have to appeal, and it can take some years to do that. This is exactly one of the populations of people who are in Badger Care, and they're in Badger Care because they're waiting for SSDI to approve their disability determinants. But this is also a person that whenever these prove your working requirements are imposed, is she going to be able to make the 80 hours of community engagement that's required per month? I don't think she falls into an easy category of exemption. This is a person who is injured, who is trying to get disability, and the injury is directly impacting her ability to work. So again, we're kind of in this catch-22 cycle of, you've got prove your working requirements that are actively not going to be able to be met by this individual who clearly has a condition that is impacting their ability to work. And those prove your working requirements are going to cause her to lose her eligibility for Medicaid, which again may also impact her ability to have the documentation she needs to be able to successfully get her disability determinants. This is the third example here. And there are many people, especially with serious and persistent mental illness, this person happens to be unhoused, that are, doing what they can. Again, gig economy, maybe they're doing work for independent people. This person is helping with yard cleanup. So, is he working for a company or private individuals? How would he document that he's done the work and how much in order to do a work, to prove he worked enough? People who are not only in house, but who have moved a lot of times or are just in transient living situations, it can be very difficult to, keep your papers with you. Things get lost, things get stolen, things get moved. And this is a great example of a person who has all of the hallmarks of somebody who really does need some healthcare and assistance and is experiencing a number of barriers that interfere with access to healthcare. And the prove you're working or exempt requirements are actively going to make this even harder for him. Because in this current state, he would struggle to establish eligibility for Medicaid as a person with a disability because, again, he hasn't been documented enough to demonstrate that he has enough of disability to prove the exemption. And even if he was eligible for the exemption, how does this individual reliably report that and keep reporting it to keep his Medicaid eligibility? Tremendous amount of people are in this situation and doing it on their own. And it is likely that this is somebody who would be unable to get into to be covered by Medicaid simply because he cannot meet the documentation reporting requirements. So as a reminder, who are the people in Badger Care? Who are folks with disabilities who are really going to struggle with these kinds of paperwork impairments? See if you know some of the folks on the list. And as you're thinking of questions that you might want to frame for, say, lawmakers, I think these are the folks that are good to frame a question around. How are people who are homeless or who can't get access to the doctor to get the documentation to prove that they're disabled? Like, I don't feel like our lawmakers actually know what you have to go through to kind of have somebody else say that this is in fact happening to you and is it a reality? And those are the kinds of questions that I think lawmakers are need to be thinking about at this point, because they're putting forth a policy that will impact people with mental illness, that will impact people with intellectual and developmental disabilities who are not in long-term care, because not everybody with IDD is in long-term care waiver programs. And frankly, if we end up in a situation where states are cutting back on home and community-based services because that's where high costs are in Medicaid, there will probably be more people with IDD who maybe if they might be in Medicaid, but they might not be in family care or IRIS or CLTS. Lots of people are waiting for disability determinants. There are people with chronic or intermittent conditions like diabetes, like Crohn's disease, like
all sorts of things that can lead to fluctuations in how much they can work in any given time. And some of those conditions are temporary, and some of them are moving towards permanent disability. There are lots of unpaid caregivers who are caring for people over age 14 that wouldn't necessarily be exempt under the Senate proposal, and a lot of people who have undiagnosed disabilities, or know they have a disability but are just struggling to get it documented. These are the kinds of people that are going to be among the first to have a lot of problems documenting and qualifying for or proving that they are working enough. And why do we keep talking about this? Because we do have examples of a couple of states who tried the prove you're working and exempt requirements. Arkansas and Georgia are the two states that tried this. And when Arkansas tried it, 18,000 people lost coverage in 5 months. And a lot of them were people with disabilities. So again, when your lawmaker says to you, oh, this isn't going to impact people with disabilities, yes, it will. Every analyst that we're looking at is saying there nobody is safe from one exemption is not going to mean that people with disabilities are unimpacted. In Arkansas, it absolutely was true. And the way they designed their program, the only people with disabilities that were excluded from the requirements were those working or those who qualified for SSI. Well, about more than half of the people in Arkansas with a disability who were in Medicaid didn't receive SSI. So, okay, there were some people who weren't subject to the requirement, but actually most people with disabilities were. And they ended up being particularly vulnerable to losing coverage because the paperwork processes to prove exemption or safeguards or other things were really, really hard to navigate. And they were more likely to lose coverage because the things that were put in place to try and protect people with disabilities were so hard that people couldn't do it. All right, so action steps. We know that almost a third of people don't know about this bill to have an opinion, and a lot of you may know some of them. Many of you have been sharing things on social media. You've been doing a lot of direct work. You've been talking to people who already know that this is a problem, and that's okay. I mean, you need to talk to friends who know what's going on. Like, do have your echo chamber to reinforce yourself. But if you haven't directly talked or messaged to people in your friend network, now's the time to do that. If you haven't talked to your extended family who you don't know what their opinion is, or if they have an opinion, do they know how the bill impacts you? Think about all of the different spheres of your life and really start to be a little more bold about it, because it is important to share things on social media, because it adds to the overall buzz, right? It is also important to have direct conversations that are harder for people to ignore. And sharing on social media can be seen as a passive engagement. I think it's time for us to have a more active engagement with real people. So there are quite a few folks that you probably know that you can start having those conversations with if you haven't already, or have more conversations or think of ways to engage with your clients if you're a provider or other folks who really need to understand that this may impact them. I think I want to emphasize the second piece of this slide the most. Again, you're the expert. You know more about Medicaid than 95% of this country, including the people who are going to vote on this bill. So using and leveraging your personal relationships and experience
should make you credible to people that you know. I mean, if you have people in your life who are telling you what your lived experience is and aren't listening to you, that isn't great. Like, they should be listening to you. Unless somebody has actively filled out Medicaid eligibility paperwork and knows about the system and knows what the system does, you know, they should be relying on you for some amount of their opinion. The reason it's important to be not only very personal and credible on these issues is that when you share your story with one person, that becomes, if it's memorable and it sticks in their mind, it becomes something that they can repeat to other people. And it may be people who you don't know. And that's actually a really powerful game of telephone, right? You say the short thing that becomes something that somebody remembers, and then they say, well, I heard from so and so that this is what it really means. And then it takes off. And that's what we need to have happen, is that more and more people know individuals who are all saying the same thing. And then when they run into, an individual and say, well, I heard from so and so that this is what they think it means. And then that person could say, I heard something similar from my friend X, and they agree that that's what that means. Now you're starting to build a reinforcing pattern. And that's how you change opinion. Lawmakers really do need to understand how many people are watching, and the more that you can do to get more people watching, the better off we're going to be. So again, this is a very personal thing, and I know lots of you have been sharing your story for a long time and edit it down to be sharper and sharper. It is very personal at this point. Everybody in Medicaid is a target. There is no protecting certain groups of people from cuts in Medicaid. Cuts to Medicaid impact everybody who's in Medicaid. And if you are one of those persons or one of the people who are supporting people who are Medicaid or who are getting paid for services you're providing through Medicaid, there is no escaping $1 trillion being removed from the healthcare system from cuts to Medicaid and the ACA, and that having no effect. That is not a thing that is true. And when people think about these programs, they need to think about real people who are in the programs, and that those are the people that are going to be impacted, and not in a good way, if these changes go through. Senators have a lot of things that they can do. They are not powerless, and they're going to have choices to make. And they're going to have choices to make in the next few days. They can choose to back off Medicaid or SNAP cuts or make them worse. They can choose to listen to some special interests and make some tweaks and changes, or disregard their concerns. They can choose to listen to a special interest, as in people like you with lived experience, or they can ignore them. They can choose to cut $1 trillion from the healthcare system, or they can choose not to do that. They can choose to create huge budget holes for their state that will end up creating cuts in states, including Medicaid programs, or they can choose not to do that. They can risk up to 16 million people losing healthcare coverage, or they cannot do that. These are all choices, and they could choose to help you. So here are 4 things as you think about framing a question to help get at the actual impacts of these bills. Here are 4 things that senators could do that would actually help ordinary people, right? And all of them are things that reduce red tape, reduce paperwork, decrease the likelihood that people are going to lose healthcare coverage because of mistakes. And if you need an extra little boost, there's only really 4 major payers for healthcare in this country. Medicare is the biggest one. Medicaid is second. The Affordable Care Act marketplace exchanges are the third, and then it's private insurance.
And this bill touches and impacts 3 out of those 4 payers. So doing these things that will result in lots of people not having insurance and not having coverage is going to end up costing everybody more. That $1 trillion being removed by this bill is only the tip of the iceberg in terms of how much it will cost the healthcare system to provide care or not to the people who have lost coverage. So doing these things that make it easier for people to remain covered also means that the payer sources for the actual care remain stable. And I don't think a lot of lawmakers are really thinking about it in those kind of big economic terms. At the event I was in yesterday, we did have a member of Congressman Pocan's office who attended. And by the way, he said that Congressman Pocan's office is getting about 500 calls on Medicaid per day. So good job for those of you who are in Congressional District 2. They are hearing about it and hearing about it consistently. But one thing that that staffer said after he had kind of listened to the unpaid caregivers and what we were saying about, the impact of this bill to just the ripple effect, he said at the end of it, and he's well informed about some of the different items in the bill. He's like, I never made the connection of how big this actually is, about how much of the economy and how many ripple effects happen when you have payer sources that are interrupted, and you have people who don't have access to care, and what it means on other systems, including adult protective services and people going without care just because there isn't any. And that was a wake-up call for all of us, that even though we're experts and we've been talking about this for months, and even though we're talking with people who may be sympathetic and may also have some knowledge of the bill, this thing is so big, it needs people like you to kind of talk about the impact on everybody in a way that breaks through. And I know that's a lot for you to do, but you're the experts now. And even our folks who are in Congress are having trouble understanding the scope and the scale of what this is going to do. So we're in a phase where, again, we're going to see some things move fast. We're going to have to be as hard at working as hard as we have been and push on the gas. We can't back off at this point. We have a lot of room to continue to influence what happens at the federal level. And at some point, I'm going to telegraph this, whatever the changes are, come to the state. And then we have to pivot and do equally hard advocacy at the state level to try and make sure that the people that we love and the programs that are helping keep them safe and healthy in the community continue to be funded at a level where people can access them. So right now we are in a position where we still can change what the federal government does or doesn't do, and we have a lot of process to go left. And we know that lawmakers can choose to do better, and that's what we need to keep asking them to do. And we need to keep asking questions in creative ways to get them to think about people who are going to be impacted that they aren't thinking about at all. With that, I'm going to stop and see if there's any questions.
Tammy, you answered most of the questions in the chat, but in the Q&A, but I think people are continuing to have questions about if they have a disabled loved one or they have a disability and they are in long-term care, how will they prove, what's going to be the proof process, and how frequent will that be?
Great question. That will be something that the state will end up having to decide. And I can't speak for the Department of Health Services, but I think there's a number of ways that they could go about that, right? States can choose to, maybe there's an automated process that says, you know, you meet the exemption, maybe not. It's all unknown right now. And of course, the other factor is, depending on how big a budget hole is, we know that the long-term care waiver programs, which are optional services and cost the most money, might be at risk of having, fewer people served by them, or wait lists imposed, or perhaps benefits changed. So I think there's just, even when something passes at the federal level, the work really has to continue at the state level, and it has to continue hard for a long time to get exactly those kinds of questions to be informed and driven by people with lived experience, right? Like somebody meaning you, will probably need to tell the Department of Health and Human Services, how do we make an exemption process as easy as possible for people who this state has clearly said meet the criteria for having long-term care needs and are in waiver programs, right? But what the state has ultimately decides on how they can do on how that happens is unknown, and it's not defined by the bill.
Thanks, Tammy. That's kind of to your last point about how important it will be to advocate at the state level once something goes through. So those were the questions that mostly were still out there. Everything else you answered.